Okay. All good. So that's great. Well, Rishi Patel from Master the Markets, I'll hand over to you to let us get started, and I'll be here. Thank you very much.
Thank you very much, Simon. And thank you again for organizing the Round the Clock Trader live events, for us all to connect with this wonderful people in this way, to be able to talk about the thing we're most passionate about, the most profitable business that anyone could entertain, I believe, in my belief. One business which has virtually no overheads and just requires and just has lots of upside. So if anyone running a business of any sort, you'll know that overheads generally chew up a lot of the profit, and of course trading has a very minimal set of overheads. So it's great to connect with everyone in this way. You're currently looking at a screen of my Euro US dollar, and I'm going to walk you through some analysis that I've done on this. And so you can see here what I've put together so far is what we call our price map here at Master the Markets. It's not actually completely finished because I wanted to actually complete the rest with all of you live, and I wanted to show you as well what each of the levels mean and what we're looking for this morning by way of trading opportunities to make some upside. So before I do all of that, I would like to open my presentation just by, of course, doing my introduction. So if we need to refer back to the presentation, it's going to be on this one just here. And this is also the presentation that I'll be focusing a lot on, and I've evolving at the moment along with Tiru, the 3-bar pattern that will supercharge your 2017 trading profits. Now, this 3-bar pattern is a proprietary Master the Markets pattern. We call it V1. And it is a superb way, a mechanism in which to identify turning points in the market. A very, very, very important thing to understand, especially if you want to understand where the switch in momentum is potentially taking place. So very much that's what the focus of this presentation is going to be on. That's what's the focus of my presentation at the Round the Clock Trader Live next week and on Saturday is going to be on as well. So do be on the lookout for that, and myself and Tiru will actually be presenting 3 different slots at the show. So do come along and meet us live, and we'll happily answer any questions that you have as well. So I'm just going to bring up the chat box because my presentation, in fact, I can't see the chat box. Simon, perhaps you can give me the organizer privileges, and then I can, of course, interact with everyone and make sure that we can continue to just get the interaction. So, brilliant. Okay, so let's kick off by just checking with everyone that you can, see my screen okay, which is on this presentation at the moment, 2, hear me okay. Punch a Y into the chat box, let me know that that's okay. As long as that's fine, I'm going to kick off this morning's session here with some live trading analysis. That's great, thank you very much. And seeing some lots of yeses coming in, that's great, and a very good morning to all of you as well, thank you. So my name is Rishi Patel, co-founder of Master the Markets, the Elite Trades Conference, and the Trades Open Day. And a short risk disclaimer just before we kick off: obviously trading on margin carries a high level of risk and may not be suitable for all investors. This high degree of leverage can work against you as well as for you. All the information that we're going to be providing is for educational purposes only. Vedanta Trading Limited and the presenters are not financial advisors. Do not recommend any of the securities of any kind. The securities that mentioned are cited for illustrative and educational purposes. You should be aware of all of the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. My background is in computer science. I didn't enjoy that too much, but now I can see going forward into the financial markets why that's been of so much use to me. I've left university and opened a video production business, which also didn't work out too well in the lead up to the recession, and so I looked at another mechanism of income, and so I started to trade financial markets. This is also the point at which I met Tiru. We started the whole journey in the financial markets in 2008. So we're now 9 years into the industry each, giving us 18 years of cumulative experience. In that time, we've spoken across multiple continents in the world. We've created live trading track records, which are completely transparent in every single way, including our live trading week, which we've just run as well. Got a transparent journal for those trades too. We have also worked with some of the best in the trading industry. This gentleman is Mark Brown. who came to our Elite Traders Conference, one of our senior mentors in this space. If you Google him, markbrown.com, you'll see his website. You click onto his research, you'll see the type of work that he's done. 45 years plus experience in the financial markets, and absolutely superb. He's a genius, and so has been mentoring us and tutoring us by way of how we can optimize our trading. So we're very fortunate to have people like that on board. There he is presenting the Elite Traders Conference. Also founders of Traders Open Day. We could see me presenting just there, along with some names, personalities you may recognize. This is me at the last Round the Clock Trader Live 2016. You can come see me again. You'll be happy to know I've lost some weight since then. And you're more than welcome to come over to our speaking slots, come over to our stand, come and interact with us, and you'll get to see what we do. Everything is done in real time. These are the results from the live trading week that took place in January. So we had 5 net trades, net profit of £550 at the end of that. On the second day, we made £1,100 live in real time. This month that we just run, the live trading week, we only broke even with net profit of a pip. Not ideal, but it's the markets as they are. It just proves that from one live trading week to another, depending on what the market is doing based around our strategy, we're going to get different results. Good. So I want to talk to you about the interactive exercises that are going to be listed out throughout my presentation. And they're in various places. So always key to pay attention, make some notes as I'm talking, write things down. And what you're going to see here is a very quantified, heavily statistically driven, with complete conviction approach to trading the markets. There's no doubts here. There are no gray areas. There is no hindsight trading where you look back at historical charts and say, wonder if you got in here and you got out here, you'd made 1,200 pips. We don't do stuff like that. Everything here is done in real time, and all of our results are logged in real time. We publish our account statements in real time, and we trade transparently in real time as well. Be on the lookout for the opportunities to interact with us at the 2-day Traders Basecamp workshop, along with our Traders Essentials kit. The Traders Basecamp workshop, of course, is one of the superb, pivotal flagship courses we have here at Master the Markets. It takes the intermediate/advanced trader and helps them to work along the journey of gaining consistent profitability, as opposed to having so many ups and downs. So good. I'm going to switch over now to, instead of going into the bulk of the presentation, I want to switch over to the market. I want to show you what's happening and how we've laid things out this morning, and what we're planning on, and what we're sort of panning out for the rest of the day, really, here, and what we're looking for. So I've just switched across here to a live chart of the Euro US dollar. I just wanted to know and just double check that you can still see my screen okay and hear me okay as well. Just because I've switched screens out of the presentation, just punch a Y into the chat box, let me know that's fine. I'll carry on. Great, thanks very much. Recognizing some names on the webinar this morning here that were in our live trading week, so very welcome. You're very welcome. Thank you very much for coming back, and it's great to have you all on board. And of course, it's natural for people to want to come back to the webinars that we present. The amount of value that we deliver, the way in which it's delivered in terms of quantification and clarity, the statistics behind what we're doing, irrefutable, and it's absolute precision. So there's no gray area. Gray areas in trading where you guess where you should draw Fibonacci to and from, and things like this, and guessing where swing highs and lows are. That type of subjectivity and doubt in trading leads to inconsistent profitability. Yet to come across a discretionary trader that's able to produce an account statement and say to me, this is what I've achieved over a 6-year period, this is my trading plan, and this is my discretionary performance on an account. On $50,000, and I've never come across that. So the quantified approach that we use is the one of preference. I'm not saying it's the only way of trading. I'm saying it's the one that's worked for us and worked for others in the team as well. Good. So let's remove subjectivity. Let's eliminate doubt by having statistics and quantification by our side as we're trading, to give us the conviction, to give us that absolute belief in what we're doing. I'm going to show you how I've drawn out my price map just here on this Euro US dollar. So there are a couple of important levels that we look for each morning as we're about to open up our intraday trading session. So on the Euro US dollar, you can see, first of all, I've got 2 dashed white lines labeled PDH and PDL. So the PDH line basically stands for the previous day's high. The PDL stands for the previous day's low. Now, why is it important? I have a question for all of you here. You can use the chat box to interact with me. I can see the room is becoming full, which is great. Thank you very much for that. It's great to have you all on board. You're more than welcome. Welcome to the event this morning. For those of you just joining, my name is Rishi Patel. The session is on live trading here on this Euro US dollar. Looking to place some trade opportunities live. I'm about to call some levels as well. But I have a question for you all before I start that. My question is very simple. Why is it important for me to know the previous day's high and the previous day's low? What is the importance behind that? Okay, some questions are coming in. So some people are saying range, support and resistance, optimum level likely of breaks. Okay, this is good. Thank you for the interaction. Appreciate it. A lot of people are saying support and resistance. Great. So let me make my question more precise. Why are the previous day's high and low levels optimum? Why are they important statistically to tell me, you know, why should I keep those levels? Why the previous day high and low? Statistically, how are they going to help me? Yes, they're levels of support and resistance, but what does that really mean to me? It's okay. So someone is saying unlikely breach. It's interesting. They're potential barriers. Okay. Yep. This is, you're basically saying resistance, movement. Okay. So there are some loose answers coming in, and that's fine. I'm going to give you a little bit more clarity on this. Before I do that, what I'm going to do, I'm going to place a little short order for us all. So what we can look to do here on this Euro US dollar, I'm going to be placing this short. I'm going to give you some levels for it as well. So what I'm looking at on the price map, first of all, the previous day's high and previous day's low. I'm going to look into that, and I'm going to give you more clarity in terms of why we're looking at that exactly. And then I'm also going to, at the same time, I'm just going to look to place this live order as well. So I'm currently seeing the range of this Euro US dollar. Now, if you look at the chart, if you look at the price map, I've actually got two red lines that are drawn in with it, don't have actual labels around them. And the reason for that is because these two lines basically denote levels at which, if broken, the range has a higher probability, note word higher probability, to form in that direction. Okay, so if we get a break, the current close is here. If we get a break of this level just here, which is 13 pips away from where we are now, if that level is broken, then there is a higher probability that my range is going to form to my downside. If I get a break of this level just here, which is on the top side, then there is a higher probability, that my trades and my levels, my range for the day, will form to the upside. Okay, so these are where the probabilities are based. So what we can look for is we can look for an element of confirmation just here. So I'm going to basically look and place a trade on the low of this particular bar just here. This is the low. This bar has made the lowest point of the range so far. Okay, between midnight and now, this bar has made the lowest part of the range. Very important to note. Now I'm going to place the order for a break of this level at the bottom just here. So what I'm going to do is I'm going to put in a trade opportunity to get a break of that level. So let me line that up now. Let's do a little analysis on that, and let's get some exact levels. So what we're going to do is place an order for the low here. 10894 is the low of that particular bar. 10894 is the low of that bar. So I'm going to place my order just 2 pips below that, just to give a little confirmation. So 1.0892 is going to be my entry. My stop on the order is going to be on the high of this bar just here. This bar has created the swing high here in the market, and that's giving me let's see, so 1.0923 is the level just there. So that's going to give us approximately 29 pips of risk from my calculation just there. Let me just double check. Okay, yes. So that's what we're going to do. Let's go ahead and do that. I'm going to punch the entry levels, the stop loss into the chat box, just so you can observe this for yourself. Again, one thing that I would like to stress here is everything that we're doing here is solely for educational purposes, and the trades are obviously the trades that we've analyzed and we're taking for ourselves. Now, your stop is going to be here at 109. Let's get this absolutely correct. Just there. So that's your first element of that. Then we're going to look for a target. Now, that's the order that I'm going to be placing, and we're pretty close to that level being broken as well. So just be wary of that. 1.0892 is currently around. We're currently around 9 pips away from seeing that level being broken. So I just want to make note of that. That's the order that we're placing. Now, what I want to do is I want to assess where the target should be. So where the target should be. Now, how do we assess where the target should be? So one of the things that I've highlighted here is the previous day's high and the previous day's low. Okay. Now, why am I looking specifically at the previous day's high and low? I asked that question, we put it out to the chat box, and we had a couple of responses come back. Most people came up with the answer support and resistance. So if there's going to be support at those levels, resistance at those levels, not really ideal for target setting. So I'm going to set targets at those levels. There's a reason that I'm going to do that. So let me explain the reason. The reason is because we have calculated exact probabilities. So get this, we've calculated exact probabilities for these levels actually being broken. So if this level, if this price currently breaks this red line just here, there is an exact probability, an exact percentage. We discuss all of these statistics on Traders Basecamp. There's an exact percentage for probability for which this previous day's low will be broken. There's also, if this red line here is broken, there's an exact probability for this previous day's high being broken as well. And the probabilities are the probabilities. Someone says to me probabilities can't be exact. Well, probabilities can be exact, but obviously they are probabilities, which means they're not 100%. I mean, then they're not 100%. So the numbers that we have for the probabilities do stand, and that's been proven over time. I could actually even pull up a spreadsheet here of testing that I've done on this concept. And if you look, and if you take a step back, a lot of people, when they're trading the market, they get sort of obsessed with strategies and indicators and other such type nonsense. And that's really sad, because it means that people don't really have the ability to sort of take a step back and really review. Now, if you don't take a step back and review, it just means that you're going to be fixed inside a set way of looking at things. And what I'm here to do today is just give you a slightly different outlook on how you can review things. Now, I'm going to give you a little gift here. And this is, it's not a planned part of my presentation, but just gauging some of the answers that are coming through. I really want to be able to add some value here to give you some shifts. Now, if you look at a daily chart of any market on any time frame, okay, not on any time, let's say the daily upwards, because I'm sure of the daily, because that's where I've done the bulk of that's where the team, our research team here at Master of the Markets, has done the bulk of its testing. So it's a daily time frame on any market. Now, the market is relevant. It could be, you could look at a chart of Barclays, you could look at a chart of gold, I could look at a chart of soya or GBP USD. It doesn't matter. If you look at any chart, you'll observe a couple of things straight away if you're vigilant. Now, what can everyone see from a daily chart here of the euro US dollar in relation to previous day highs and lows? What is a pattern that you can see here? Talk to me about a pattern that you can see. I want to keep my presentation interactive. Talk to me about a pattern that you can see. Okay, good. So someone says higher highs and higher lows. That's really good. Now, if you've got higher highs and higher lows, and you're looking at swings in terms of higher highs and higher lows, then what does that mean in terms of individual bars? What do the individual bars do in relation to previous day high and low? What do they do? Move above, absolutely. Exceed, yes. Now we're talking. That's right. Go up. Next day usually breaks either the previous day high or low, someone says. Right now we're thinking. So you see, if the next day usually breaks previous day's high or low, then for them to be levels of support and resistance where you see bounce offs, not really necessarily correct. So when we go back and look at the original question that I asked, which is why we look at PDH and PDL, it's not because of support and resistance necessarily. What we're looking for are actually, from an intraday perspective, you can actually use the previous day high and low for target setting, but there's no point doing that unless you know the probabilities, because otherwise you're just shooting yourself in the foot. And that's the reason that I've drawn out on this Eurodollar chart. We've drawn out these levels just here, and you can see that running. Okay, so we're getting pretty close to this trade order triggering. What I want to do here very quickly is also place the order myself. So let me do that now. Bear with me just a moment while I get the order on too. Of course. Okay, great. So I've just got that order in as well on the market. So 10892 is my entry level, and 10892, as I said, is the entry level. Also put a stop in there as well. Now, one thing that you've all identified from looking at the daily chart of that Euro US dollar has been very much that previous day high and low do break. So if we know that, then we can calculate the exact probability, and we have calculated the exact probabilities. And I can tell you that there is an exact probability that if this red line here is broken on this Euro US dollar, that there is a higher probability that this previous day low will also be broken as well. Now, one thing that we can also look at here as well is the master of the market 80% RB trade strategy, which I can also walk you through the premise and the concept of in just a moment too. Now, the 80% RB strategy basically looks for a V1 price action setup, which we actually have on this Euro US dollar today. And that's a V1 type 1, which is an opportunity to actually go short. So the intraday time frame here on the 1 hour chart, which I've placed a live order for, is also adding up with the end of day time frame as well, the daily time frame as well. So what we're potentially looking for just here is for the price to continue moving lower on the intraday time frame, for us to be able to potentially take profit on the previous day's low, which is where our target would be. The previous day's low is 1.0855, so 1.0855. But what I'm going to do is I'm going to add spread as well, so I get out on the low. I need the chart price to hit that level. I don't need my broker account to accommodate for that, so I'll add a 2 pip spread for that. So the previous day's low being 1.0855, my target will be 1.0857, just there. So make a note of that. And that's basically what I'm looking for now. So I mean, in an intraday time frame, we can have that as a starting point. But what's clever here as well is we can also hold this trade, or we can even use another position if we wanted to take this down for an 80% RB trade set up as well on this Euro US dollar. So now look, if you look here on the 80% RB, we have an exact exit point as well. So I could also calculate a target for that and use this as an end of day opportunity as well. Another opportunity that I have here as well is the fact that you also have a gap here. And gaps in foreign exchange have a higher probability of closing as well. Note again, higher probability. I don't know what the probabilities are of gaps closing as well as I do for previous day high and low, the way that we know that. The other thing that we also very clear of as well is the probabilities not only that the previous day's high and low will be broken, but also of what size the range will be from the entry point. Or not necessarily the entry, but from the open of the day. So here you can see, I'm looking at the euro dollar 1 hour time frame. From the entry point to the high of the day so far, there's a 13 pip range, and from the open of the day to the high of the day, there's a 13 pip range. From this point to here, we've got an 11 pip range so far. So now, if this red line is broken just here, and you can see the price is actually now getting very close. You can see a pickup in momentum just here as well. As the low of that bar is broken, we're triggered into that trade just there, 1.0. We're a pip away from being in, but you can see, can everyone see clearly that the momentum has picked up on this opportunity? Let's watch to see what happens if and when it breaks this red line as well. So if it breaks that red line, as I said, there's a higher probability that the market is actually going to create its range in that direction. First target can be the previous day's low. There you can see it's broken the low of that previous bar so far. That low is held for 3 hours. So that's an important level. And this is denoting momentum coming into the market. Can everyone see that that momentum is kicking in? Punch something into the chat box, unless you're all running to run and place that order. But put something into the chat box to let me know that you can see the momentum kicking into that market. You can, great, thank you. So this is why we called this session live trading, because that's what we do here at Master the Markets. And you can see as well, there are no indicators on the chart. I don't really need anything in order to be able to assess everything that I'm telling you. All I have are some colored lines. And using that, just pure price, we can work out all of these probabilities. And I can tell you something as well, in the training industry, you won't have seen anything like this, where it's just purely done price driven, where you've only got price on the charts, only lines and no indicators whatsoever. That's what we do here, and that's how we professionally navigate this space. Now watch to see, you're going to see more than likely, I believe, that this red line will be broken in the next couple of minutes. So let's see the momentum kicking in. And if it is, as I said, the probability has just increased that the range is now going to be formulated in that direction. So keep a lookout for that. We'll keep a lookout for that. What I'm going to do is I'm going to go and switch back to my presentation. I just noticed a couple of comments that are coming to the chat box. Someone says that we're trading this against the intraday trend, but actually I would ask you the question that's sent through by Nick. Nick, I'd ask you the question of how you would even define trend to start with, because for us to make a statement, first we need a definition that we all agree to for trend. And so the intraday trend here actually as far as we're concerned, is very much down. But if you have a different definition of trend, then yes, it would be against the interest rate trend. Most people that I've worked with, yes, okay, 4-hour and D1 trend, then how do you define trend on those time frames? Again, to that, most people say higher highs and higher lows, to which I would ask the question, how do you define your highs and how do you define your lows? At which point people normally guess. And that normally tells me that actually you're not really quite sure what you're talking about. It's filled with doubt. You lack that conviction to be able to make consistent money because it all stems from doubt and lack of clarity. And that's what the Master of the Market Smart Money Indicator is designed to do. If you look at this indicator, it's actually giving you the trend on any time frame, any market. And it will give you clear highs and clear lows on any market, any time frame, which means I know what the trend is at any given second in the space that I'm trading. And I know here that the trend is down. I also know that there's a higher probability that if this red line is broken, we'll get to this white line. I also know that if the white line is broken, what the probabilities are of us filling this gap, not this gap, but for us to make the range to the downside is. And if the PDL is broken, then obviously you can see momentum kicking in, and we'll have more than likely this gap being filled over the next couple of days. So it's really interesting setup, but it's all done purely price driven. I'm not using indicators, and I'm doing it all live here right now and in front of you. I'll hold this trade, and what we'll do is I'll drop Simon a little message with an update later. To let you know how it's all panning out. Now, if you would like to receive a live real-time update, who would like to receive some live real-time updates on this trade as it's panning out right now? Fantastic. There's plenty of you. Okay, great. So what we can do is if you'd like to receive live real-time updates of this trade as it progresses throughout the day, because one of the things we do here at Master Market is not just place a trade live and then leave it on its own. We'll manage it up to completion. Okay. Now, if you want to receive real-time updates of this trade, what we can do is we can add you to a broadcast list that we have set up, where we also publish trade opportunities and other trades that we've taken, historical opportunities that have been taken, 80% RB trade setups here at Master the Markets, actually all of our best real-time material and best material for trades that we've taken, all published by way of video, by way of updates on this broadcast list. Very simple process in order to be able to join that list. All you need to do is send a message into the chat box that you've been sending me. That's a private message on the chat box that you've been sending already. Only I can see that, as well as Simon. And just send across your mobile number. Mobile number has to be WhatsApp enabled. If you've got that, then we will add you to a broadcast list which will keep your details confidential and allow you to receive trade updates of this in real time. So all you need to do, if you've got an international number, by the way, please put in the country code as well, because I think one of my team who was setting up the broadcast list didn't have country codes and so wasn't able to successfully do that. So type in a mobile number with dialing code as well, if relevant. We will add you to our broadcast list and you will receive your updates on that WhatsApp group automatically. Coupled with the mobile number, if you add your email address to that as well, it allows us to get premium content from us as well. Okay, getting lots of emails and WhatsApps coming through. That's great. One of my team is going to join the webinar shortly to just collect the information and make a list. So not a problem. In the meantime, I'm just going to switch back to my presentation. So bear with me while I do that, and we'll carry on monitoring this trade opportunity as well. Okay, fantastic. And I also appreciate that there's lots of people here coming in for the first time, so it's great to have you all on board. There will be a recording of this, Maze. So if you're watching this on a recording and you're watching us trading real time on a recording, that's absolutely fine. If you want to be added to our WhatsApp broadcast list, we've got absolutely no problem with that. If you're watching a recording, simply send an email back to Simon, reply to one of his emails, let him know you'd be like to be added to the Master of the Markets broadcast list, and reply back with your WhatsApp mobile number, and he will pass that information on to us. I'm sure he'll be happy to do that. And we will, of course, do that for you just there. If you would like to be added to the, one more time, I've got a couple of people asking to be added. If you would like to be added to the broadcast list, please send across a mobile number. It can be from any country, it doesn't matter, as long as it's WhatsApp enabled. We will add you to that, and we will supply these updates and real time, especially when we're taking trades. That's what we like to do. Switching back to my presentation now. So I want to show you a little bit more, because I've talked a little bit about the 80% RB and the fact that we've got a potential setup for today. So what I really want to do at this time is I want to be able to just walk you through what that setup is, the concept and objective, and obviously some opportunity rules that you can get involved with. So a lot of people, before they start trading, I've already mentioned this, don't have a clue about these three key points, especially the third one, which is if they know their strategy will continue to make money or not. So that's it just there. So let's get aware of this. Let's get aware a lot of the gap, especially. The gap is very important. I have a question here. Who is able to admit, by just punching a Y into the chat box, who is able to admit by punching a Y into the chat box that they're not making consistently profitable returns from the market? Put a Y into the chat box if you fit into that category. Okay, good. So I can tell you, as a percentage of people punching a Y into the chat box right now, based on everyone that we've got in the room, so the percentage of people that are putting in a Y into the chat box right now is about 10%. So you see, and this stat holds true, and this is also the reason that the bulk of people don't really make money in the markets ever, because initially when you start off trading, you have this unconscious incompetence, you have an initial set of profit. And obviously then when you start to trade more, losses kick in, and people are unable to admit that they're unsuccessful, have this ego. But of course, if you're able to admit that, you form a gap in the subconscious mind to become aware of that, so you can then become a consistent and profitable trader. Most traders use inconsistent parameters with inconsistent execution and invalid statistics, and that's a problem, of course. So they have invalid rules. Their numbers, everything that they do is inconsistent. They can't make consistent money. What I've shown you here on this euro-dollar trade, now the trade is open at the moment, and it will sit in an open profit and loss for a while. We'll pick up some momentum. We'll hold it short for the rest of the morning, and we'll update you on the broadcast list. We'll update you on the broadcast list as to if and how this is actually progressing. So one of the things that you're going to see from us is that you will consistently see opportunities we're taking are quantified, and you get consistent results with them. What we do is quantified, statistically driven, so everything we do is consistent. Now most traders do this, they do this pattern where they don't use a consistent set of parameters and they can't get the results they want. On top of that, they can't admit that, and so they never formulate the gap. If they never formulate the gap, the subconscious mind is never able to bridge it, and that's why you hear 95% of traders being unsuccessful in this space. And so it's very important to be honest and integral to yourself as to where you are. Most people end up hitting their head against a brick wall, but what I would propose is for you to join a Traders Basecamp 2-day workshop with us, form mastermind alliances there with people who are on this journey, on this path to making consistent money, to making consistent profitability. And of course, this is what's critical. This is what makes everything work. And so if everything works, if everything is done in a quantified, statistically driven manner, if you're working with people on that path, you're in the energy of those people who are proven, who are trading the markets in real time, who don't hold that fear of trading in real time, then of course you're going to get the very best, your very best opportunities just there. So this is what you need to know. This is what you need to understand. And you really need to formulate these opportunities. So you must definitely be in this energy, be in the energy of Traders Basecamp, up your skill set. The concepts I'm showing you today, I'm going to show you in so much more detail on this 2 days. When we're in the environment, we can gauge everyone's understanding level and we can accelerate progress. So that's the point just there. So the concept of the 80% RB, what is it? So the concept of the 80% RB all orientates around the fact that swing highs and swing lows constantly form in the market. That's true. It's fact. Swing highs and swing lows constantly form in the market. And the whole premise of the 80% RB is that when the price closes above 50% of its range, then there's a 68.2% chance that this next bar will break that bar's high. So we call the first bar here in the V1 pattern, this green one, PSWB. PSWB plus 1 is this bar just here. PSWB plus 1 has a 68.2% chance of breaking PSWB's high if PSWB has closed 50% above its mid-range. And that's how this whole thing works. And the objective of the 80% RB is to capture the range from open through high, in this example, or open through low if you're taking a short V1 opportunity, which we are on the euro dollar. So that's the whole objective of the 80% RB. We've formulated some research study guidelines because when we're building a strategy here at Master the Markets, it's tight and it's consistent and it's constantly reviewed for profitability. It's constantly reviewed for potentially breaking, and this is what's important. And we took into account 11 key criteria of the V1 pattern. We asked all of these different questions in regards to the PSWB plus 1 because we want to understand if our V1 pattern is good at picking out turning points in the market. So 11 key criteria were taken into account on the V1 pattern. I'm going to give away some prizes now. I'm going to give away a free ticket to the 2-day Traders Basecamp, coupled with a 50% TE kit voucher. So if you're purchasing a Traders Essentials kit from us, for which Milan is putting in a link to Traders Essentials kit into the chat box now. If you're purchasing a Traders Essentials kit from us, then you will get a 50% discount voucher to that, coupled with, if you're buying that, a free ticket to our 2-day trading workshop. So that's the key. And this is the Traders Essentials kit. The Traders Essentials kit is a set of superb tools, which will enhance, whether you're a new trader completely starting out, it's got some material in there for you. If you're a trader that's already on the journey, but you want to make inconsistent profits into consistency, then this has a set of tools in there. For example, our custom trade journal, which is our own IP, which we formulated all the key equations and formulas around to help it calculate the stats you need to read your strategy's performance to make it profitable. It's also got in the crib sheet templates and descriptions of how to use all of that so you can make it quantified, consistent, profitable. So that's what the T-Kit has inside. You're going to win a 50% discount voucher. If you'd like to win, all you have to do is answer this question correctly in the shortest space of time before everyone else does. The first 3 people to get the correct answer will be issued this prize that I've just mentioned. So the question is, what is the objective of the 80% RB strategy? What is the objective of the 80% RB strategy that I've just gone over here? What is the objective of the 80% RB strategy? I'm getting some answers coming through. Okay, there are some answers coming through. We've got some correct answers. Keep going. We still have, it looks like we still have another 2 prizes to give away. If you haven't had an opportunity to type in the answer yet, you're still not too late. I know most of you are probably still typing at this point. What is the objective? So the objective of the 80% RB trade strategy is the question. So if you go back, I talked about a concept, I talked about an objective. What is the objective of the 80% RB trade setup? Some more answers coming through. There's still another prize to be given away, so we've got 2 winners so far. We want 1 more. We've got 1 more prize to give away for a correct answer.
Rishi, we'll need to be thinking about wrapping up if we can. I'm afraid we're just run out of time.
No problem whatsoever at all there, Simon. We're happy to do that. Maybe about a minute or so.
Yeah, thank you.
Brilliant. Okay, so what is the... Okay, good. So I'm going to award some prizes. So first of all, congratulations to Jan for getting an answer in there. Also, congratulations to... I can't see your name here. You can put it in. So TN. Both of you have put in good answers here, and Millen will be contacting you both to ask for your information. What you need to do now is send a message into the chat box with your mobile number and your email address, so our team can reach out to you and issue you a prize. So congratulations to you. Well done. And so we will reach out to you, and of course we'll issue you with a prize accordingly. Well done. So that's pretty much it from me just there. We've gone over some live trading here in real markets in real time. And we have also placed some live trades as well. So and that's what we've done, and we've done it here purely based on the price action. So you can see we are getting momentum kicking into the market here on Eurodollar. We'll carry on monitoring this. If you want to receive the trade updates, if you want to see where we're going to trail our stop to a little later this morning, if you want to see how we're going to manage this, where we close it out, you need to send a message in that chat box with your email address and your mobile number. Our team will put you onto our broadcast list. Your details remain confidential, and we'll use it for that purpose only. Simon, I want to say thank you. Thank you very much for connecting us. Thank you very much.
Thank you very much, Rishi. I'm sorry to be the axe man. We've got a fairly tight schedule today, but thank you very much, Rishi Patel from Master of the Markets, for starting our event today. And as he says, keep in touch, and we'll send out an email with an update of these trades for you. Thanks, Rishi. I'll take the presenter role back from you, and then
thank you, and have a great day.
Roll on.